Most people think banks treat everyone the same. You walk in, wait in line, show your ID, ask for help, and some person behind a desk either approves you or tells you no. That is what it looks like from the outside. But the moment you start having real money, you realize there are basically two banks living inside the same building. One bank is for people who need money. The other bank is for people who already have it, and the experience is completely different. At the lowest level, you are not really a customer, you are a risk profile. You have a checking account with a few $100s in it. Maybe your paycheck hits on Friday, rent leaves on Monday, and the rest of the month is a quiet balancing act. The bank smiles in the app, but the rules around you are sharp. Overdraft fee, minimum balance fee, late payment fee, returned payment fee, ATM fee, monthly maintenance fee. It feels like every mistake has a price tag, and somehow the price tag is always aimed at the person least able to pay it. If you need $500, the bank asks you to prove everything. Where do you work? How long have you worked there? What is your income? What is your credit score? Why did your score drop 3 years ago? Why was that payment late? Why should we trust you? You are asking for a small loan, but it feels like you are standing trial. Then comes the middle level. You have a stable job, your credit score is decent, you keep some savings, you are not rich, but you are no longer invisible. Now the bank starts treating you like someone who might become useful. You get credit card offers in the mail, pre-approved loan emails, a slightly better app experience. Maybe someone calls you about a mortgage. But listen carefully to the tone. They are not giving you money because they believe in you. They are giving you money because you are predictable. Predictable income, predictable spending, predictable interest. To the bank, this is a beautiful thing. You borrow $30,000 for a car, and they know you will spend the next 5 years paying it back. You get a mortgage, and suddenly you are not just buying a house. You are becoming a 20 or 30-year revenue stream. This is where banking starts to feel friendly, not generous, friendly, because you are finally profitable. Then you move up again. You make good money, you have investments, you have equity in a house, you do not panic when a bill arrives. And suddenly the same bank that once charged you $35 for being short $10 starts acting like your financial partner. The language changes. Before they asked what you could afford, now they ask what your goals are. Before they asked for documents, now they ask when you are available for a call. Before you waited on hold, now someone has a direct number. This is the level where you discover that customer service is not a fixed standard. It is a ranking system. The more money you have, the less automated the bank becomes. You get higher credit limits, better rates, fee waivers, faster approvals, invitations to products you did not even know existed. And the strangest part is this: the more capable you are of paying cash, the more excited the bank becomes to lend you money. When you desperately needed a loan, they hesitated. When you barely need the loan at all, they compete for you. That is when the whole system starts to feel backwards. But it is not backwards to them. It is exactly how the machine is designed. Banks do not reward need, they reward low risk. Now you enter the high net worth level. This is where banking stops feeling like a place and starts feeling like a private network. You are no longer calling customer support. You have a relationship manager. You are no longer comparing savings accounts. You are talking about tax strategy, asset-backed loans, private investments, trust structures, and preserving wealth across generations. The bank does not see you as one account. It sees your house, your business, your portfolio, your future inheritance, your possible children, your future grandchildren, and every transaction that could flow through all of it. At this level, debt changes meaning. For ordinary people, debt is often a trap. For wealthy people, debt can become a tool. If you have no assets, borrowing money makes you fragile. If you have assets, borrowing against them can let you avoid selling, delay taxes, buy more assets, or keep your lifestyle untouched. Same bank, same word, loan, completely different reality. And then there is the ultra-rich level. At this point, banks are not just serving you, they are pitching you. They want your deposits, they want your investments, they want your company accounts, they want your family office, they want proximity to your deals. The relationship flips. A normal person walks into a bank hoping to be approved. A billionaire has banks trying to prove why they deserve the relationship. This is why the richest people can sometimes borrow at rates regular people will never see, negotiate terms regular people will never be offered, and move through financial problems with options regular people do not know exist. But here is the part nobody likes to say out loud. The bank was never your friend at any level. At the bottom, it protected itself from you. In the middle, it profited from your predictability. At the top, it competed for your assets. The smile changed, the math did not. So if you are trying to build wealth, do not just ask, how do I get more money? Ask, how do I become less risky to the system? Because the more stable your money looks, the more doors quietly open. And eventually you realize the biggest privilege in banking is not having a lot of money. It is being treated like someone who does not urgently need any.